The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, good afternoon, folks, and Happy New Year to everyone as we enter the holiday season for the last day of the year. It's always interesting, usually thinly traded, but still interesting. I have to tell you a story. I like to tell stories, of course, but I went into Walmart with the family in Delaware this past weekend, and they had a book there, the greatest baseball players of all time. And on the front cover, they had 15 pictures, and on the back cover, they had 15 pictures. And my wife wanted to buy me the book, and I said, I wouldn't buy this book for 10 cents, and I wouldn't even buy it for a nickel. And she said, why is that? And I said, there's not a picture of Joe DiMaggio or Willie Mays on the front cover or the back cover of this book. And I just couldn't believe it. And what I did, I opened it up, I found out the author's name, and I guess the book was probably published in Terre Haute, Indiana, which is my hometown. But I just couldn't believe that they didn't have two of the greatest baseball players ever listed on the front cover or the back cover. They did have a nice little section in the middle of the book, but to not have those folks on the top, the front page of that is just that's heresy. In my opinion. So anyway, that's neither here nor there. We'll get to the markets. We're up again, as we've talked about several times, and Basil has also talked about it, as has Steve Rhodes. We've had a situation here the last 3 days of the month, and the first 3 days of the month are very, very positive historically, and so that's one of the things that, is really interesting statistic that, and that's basically because of the hedge fund, not hedge fund so much, but the 401ks and the mutual fund people. They do a lot of window dressing at the end and the first of the month, which is a statistical factor that you have to take into effect. The January effect has, I guess, already started. We've had that big move we had off the 17th of December. Supposedly the second or third week of December starts the January effect, where small caps gain on large caps. And we've seen this happen already, where the IWM has already started to move. Hasn't quite made it into new high ground as yet, as I recall, but it's very, very close, if it's not already there today. But I know it's very, very close to taking it out. We have not taken out the New York Stock Exchange Index high yet. That's at 11,000 and change. We've been to 10,099, I believe. Very, very close to that, of course, but not right on the spot yet. So we should be able to do that in the next few days. It's going to be really hard for the market to break much from this level for two reasons. One is it's the end of the month, and an up month, and an up year, and an up week. I mean, that's really hard for it to break. And then you have the beginning of the year, the second and third. I'm looking at the 3rd of January. And we'll see it. But the question is whether we're going to have a really big, everybody has to get in, a come to Jesus moment in stocks, where everybody that hasn't bought anything for the last year, with the stocks up 10, 12%, they all decide to come in on that first day or two of January. We could certainly see something like that. Now, one of the things, actually the first thing that I posted into Tiger TV today is the Bradley model for 2015. As you can see, this has more turns than the winding road in the Grand Canyon. I'm telling you, folks, this thing has really got a lot of hits this coming year. And one of the things that Bradley's really good about is the date itself. So we'll have some really interesting dates to look at on the Bradley model for 2015. However, we don't have the situation yet of what the trend is going to be, but we should know that after the first week of January. We've got our caller from California. Brent, are you there?
I am, Larry. How are you today?
I'm good, my friend. What can I do for you?
I have a stock I'd like to look at with you, if you could, please. It's just because it looked like it had done a island reversal on the daily chart. It's
okay.
Solution, the SWKS.
Okay, I understand that. And it is what is the business of this stock? Is it a?
I think it's a semiconductor stock.
Oh, okay, yeah. Well, it's had some type of a reversal today. It looks like it's had a. Wow, this thing has really moved. It went from 40. It's almost doubled in price since October. That's one heck of a move. Let me put this up here, and we'll all take a look at it because let me do the ABCD on this because it just looks like it's made a perfect ABCD here. Wow, it did. On right up at that 75 level, and now we gap down today. Did we gap below 72 on the open, Brent? Do you know?
Yes.
That sets up for an island reversal on this stock, especially if it closes below 72. That would be a really negative. I wouldn't want to be owning this stock. It has a 3 drive to a top pattern. It has a major ABCD pattern completing from October 13th. So I would, and with the way that it acted today with the market being up, I would have to say sayonara to this stock and look at something else because.
I was looking to short it, Larry.
Yeah, well, that's the way I would look at it because it's got a lot of things there. You have a 3 drive to a top pattern that started back around Thanksgiving. That finished here, right a couple of days before Christmas. And, boy, this has got all the patterns that you need to get it to go short. So the one thing you wouldn't want it to do is you wouldn't want it to close above 75 now because it would be a reversal. It would be a reversal on the upside. So you've got about a 2.5 point risk here, but your profit objective on this would be a minimum of probably $10 is what it looks like to me.
Could you look at a 5-year monthly, too? It looked like there's a period going back.
I can go back weekly, I believe. Give me a second here, and I'll pull this up, and we'll see what the weekly looks like here.
A period back in from 20.
Wow, this thing went from $20 all the way. Wow, all the way down. Wow, my gosh, it was down around $4 a share at one time.
Yeah, it had a similar pattern back in between 2010 and 2011 where it went kind of parabolic. Yeah, so it's interesting. We
should have called me back then. I might have bought some for myself. No, I never buy stocks. I put my money in something that comes out it's gold or silver. That's all I ever do is just buy coins and stuff, and that's what I've always had great success with. Real estate and stocks, I'll tell you, I'm just not. I just don't hold them. But boy, the other stuff has been very good to me. This has been a straight-up move. I just looking at that daily, I have to go short, I would think. But frankly, boy, it's had one heck of a move here just since October. It's had, a monster move, almost doubling in price. That's really something. Is it very liquid? Is it heavily traded?
I think it does probably at least 1 million shares a day.
Oh, that's incredibly liquid. Yeah, that should be fine then. But that should be your game plan. Look to to sell it maybe on a 61% retracement back from today's high. That would put you in about around 73 and a half. That would be a 61% retracement back, and then you'd stop it above 75 and a half is what I would look at, and that would be a $2 risk versus a potential for a $10 gain.
Yeah, it didn't seem like too bad on the risk-reward side, so.
That's what it looks like to me, my friend.
All right. Thank you very much, Larry. Have a great
listen,
day.
Happy New Year to you, and I hope you get a little more rain this year than you did last year.
I do, too. Happy New Year to you.
You bet, buddy. Thanks a lot for calling in.
All right. Bye.
Okay. We're having a pretty good breakdown here in the crude oil is breaking down. We felt all along it was going to get down to that $52 a barrel level. It looks like it's going to make that without too much trouble. So we've had a call in and we lost the caller, unfortunately, but we want to bring the chart up because I'm sure if he had a question, there's probably somebody else has a question, and that's in the IWM. And we did make a new high in IWM, I believe. I think we hit it right on the money. We were right at the same high again. I'll put this chart up, and this is part of the January effect, so this should be happening. And we are going, looks like we're going to be going higher here yet. I think we're in the 9th day of the rally, so that in itself makes it an outlier event. but we'll see if it continues higher or not. This is actually the third high we've had since March, when we hit the 121 level. Then we hit 121 again in June, before we had the big break of it had a 10% break down into the October 15th, and now we're back up to that 121 level again, which tells us that we've reached this expanding triangle again one more time, and this is the third time that we've been here. Usually third time is a charm, but you don't know for sure. But it does look relatively strong compared to the NASDAQ, especially, which has not made new highs, and we've made new highs, of course, in the the Dow Jones and also the S&P 500. Remember, folks, when we talk about new highs in the market, we're talking about 530 stocks. There's 500 stocks in the S&P, but some of those are also in the Dow, so they're double counted. If you take the Dow 30 stocks, the 500 S&P stocks, and the 100 NASDAQ stocks, that's 630, but as one of our subscribers kindly pointed out to us, Mr. RK, that you will see that 100 of those stocks are double counted. So there's actually only 530 stocks making new highs over the thousands that are out there. We have not made a new high yet in the New York Stock Exchange Index. However, I really believe that we're going to do that, because we're just up here at such an easy level to reach that it would be really unusual for it to not make a new high. In fact, I almost fainted when I was listening to Basil's show, because he said he was looking for a steep decline sometime in early 2015, and I checked my internet connection, I checked my phone connection, I checked my cell phone, make sure I was still I checked my pacemaker on my heart, and sure enough, that's what he said. And I agree with that. I just think there's too many people that are bullish. I think that the margin debt is going to be a problem. There's a whole bunch of things that I think are going to be a problem, but we'll wait and see. The new highs to new lows just totally looks terrible. The distribution in the market is certainly not bullish. The divergence that we're having versus these 530 stocks, and also most importantly is Sir Isaac Newton. One of his favorite laws was, what goes up must come down. I don't know when must is, but it's getting pretty close to that time, I believe, in the stocks. We had that. You have to respect that move coming out of December, folks, because that was really something. That December 17th day when we were up a little over 400 and some points, that was really a really, really big move. I wanted to bring to your attention something on a long-term basis, because we're getting very, very close to this number, too. This is going back over the last 15 years, and that is the chart on the utility index. That is very, very close to a 3-drive to a top pattern as we speak. We've got to pay a few bills here. We got the Dow up slightly, gold going down into circling the sewer as we speak. We'll be right back after these few words.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Think or Swim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we're going to be talking a little bit about the Russell small cap futures. And as you can see, I posted that into Tiger TV. He has exactly the same pattern as the ETF, the IWM. It's making that it's a very, very distinct three-drive pattern, but it's each one of them is equal. So it's each one of them takes the high out by just a little bit. So this is one to really kind of keep an eye on, because the only thing that'll prevent this from turning down is a real blow-off to the upside. And that could certainly be the case. If you remember the work by Dr. Andrew Lowe in his book, The Non-Random Walk Down Wall Street, there were about 15 different patterns that they analyzed in that book, and one of them was a three-drive to a bottom pattern and three-drive to a top, as being very, very indicative of what prices were to go. And when that breaks out to the upside, that's a very distinct thing. And if it doesn't, that tells you that the distribution that's going on, or the accumulation, if it's at the bottom, is very, very important. So that's the main thing that, to see what really happens. We'll see what that is going to happen. So we'll wait and see. Now, there's one other pattern that I wanted to bring to your attention today along that same line, is the euro. And I wanted to bring this up on the daily basis and also the weekly basis to show you where we are. First of all, I'll put the daily one in, and then we'll spend more time talking about the weekly, because that's the one where we're looking at that same pattern. As you can see, we're down here, down this 121 level in the euro, and if we switch over and take a look at it on the weekly basis, you'll see that we come up with a triple bottom that's also coming in around this 121 level. Now, the euro has been down basically, well, not basically, it has been down since March. I mean, every single month, every single week, almost every single day, it makes new lows. Now we're at a triple bottom now around this 120 level, so we're only about a point or so away from that. We're only a point away from the low we made back in 2012. The longer term price objectives on this are just as clear as a bell. At least from my perspective, it's down around the 110 level and possibly even lower. And if you'll remember, back in 1999, the euro got all the way down to 85 at one time before doubling in price up to the 160s levels back in 2008. And here we are, coming into the opposite side of this, and it is, making, lower lows. So it does look lower, but it's extremely oversold, and you can get a really strong rally in the euro without too much trouble. Whether it's going to be related to anything that the ECB does, the European Central Bank or not, I'm not really sure. I don't follow the news at all, and I follow the reaction to the news, but the actual news means absolutely nothing to me from a fundamental standpoint, because for two reasons. One, I don't understand it too much, and I have a master's degree in business, with specializing in economics, and I still don't understand some of these things, especially this QE thing. That just totally amazes me that you can create money like this and not have any inflation. That's not the way the rules are usually played, but this is how it's going this year, so we'll see how this ends up, when it's finally said and done. Okay, now we had one other question about the price of the stock called Apple, and I happened to be in a big mall on the day after Christmas just to see how the crowds were. And, of course, we had to go to the Lego factory for the little ones. And I was amazed. Well, I shouldn't be amazed, because I had never been into an Apple store ever. And it was standing room only. It literally was. You just literally couldn't even hardly get inside the door. They had probably, imagine 50 or 60 clerks in there. They were all being swamped, and all kinds of people, in the store. I never watched what they were buying or returning or anything like that. It was the most packed store in the whole mall by a long stretch of the imagination. And they had 2 security guards out there. What they were there for, I don't know. But it's a very busy place. So I don't know much about Apple. I have an Apple Nano. That's about the only product that I have in the Apple line. But they must be doing something right, because the store was absolutely filled. It's amazing that just about 18 months ago that stock was trading at $3.85 a share. Nobody wanted it. Everybody wanted it at $7.04, but at $3.85, nobody wanted it. So got to buy them when they're crying and sell them when they're yelling. Okay, we got gold still under pressure. Treasury bonds rallying a little bit. We'll be right back after these few words.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I'm back, and I posted into Tiger TV the chart of the Treasury bond market on a daily basis. As you can see, we've had the big spike up during that come to Jesus moment in the bond market. Now, when I refer to that as a come to Jesus moment, folks, I don't mean that derogatory to the Lord himself. It's just something that I learned as a little boy, and it stuck with me all these years. And that was the time when you finally see the light, and that's what happened in the bond market when it was making that spike high. That's all that means. I did get a couple of emails about that because I refer to that occasionally. I certainly don't mean anything derogatory in any way, and believe me, I ain't going to change because that's just me. And the boy upstairs and his mom and dad know that too, so I'm not worried about that a bit. But that's what happens. Everybody's got to get to the party at the one time. It's the old Merck saying, you got to buy them when they're crying and sell them when they're yelling. But with this bond chart, you'll notice that the blue chart is the blue line chart is the 10-year notes, and that's the one that's the real key interest rate sensitive one. That's where we get our car loans, our interest rate loans, our mortgages, and all that stuff comes off those 10-year rates. So that's really interesting. As a matter of fact, there's virtually no interest on automobiles now. Everybody's offering 0% and tremendous discounts. It's really amazing what they're doing in the auto industry now, to get you to come in and to buy the cars, which is it's a good thing. It helps stimulate the economy. But with this divergence that we're seeing, where the rates are going higher in the 10-year faster than they are with the 30-year, that's telling us that the rates are getting ready to go higher. Now we'll have to wait and see if that's going to mean anything. We've talked about this before in the market, is the fact that the junk bond market, i.e. the high yield market, has had a really bad break, and it's had a nice rally over the last 10 or 15 days when they've reduced the amount of bad loans and stuff on some of these oil deals. That's where most of these defaults were coming from in the junk bond market. So some of that has been alleviated a little bit, but with oil still dropping, that's still the case out there, because we don't know how low oil is eventually going to go. We've already broken below the lows in our natural gas. We've broken below our lows in the heating oil. The only support that I can see is the 786 retracement in the crude oil that comes in at around $51 to $52 a barrel. We're only $1.50 from that right now, and we could be there by the end of the day. So that doesn't mean it's going to stop there. That just means it's going to be at the first support. Now, we went through the 382 with like melted butter. We went through 50% very, very quickly. We went through the 7/8, 61% retracement. We held there actually for about 6 or 7 days at that $64 a barrel level. And then since then, we've been breaking down, and we're now heading towards the looks like the 786 level, which comes in around the $51 to $52 barrel level. It's sometimes it's a little difficult to pick up because of the rollover of the contracts. So what you do is you try to use a continuation contract to get to the spot what you're trying to look at. But it's oversold by any stretch of the imagination. And believe me, when the rally comes, as they usually do, it'll be a lot more than people are expecting. We might even get all the way back to that $75 a barrel level where we broke down from. But that's, you're talking about a 40% move in crude oil, and how long that will take, I don't know, if in fact it will happen. Remember, we went from 142 down to 33 in 2008 and 2009. That was the Goldman Sachs trade of the year, to see oil at $200 a barrel. And later on we found out, believe it or not, that they were actually selling into that report. That just seems hard for me to believe that that happens in our business, but that's just the rules that we play by. That's why when you're a technician, you don't have to listen to what they're trying to tell you. Just look at the prices. If prices are going higher, there are more buyers. If prices are going lower, there's more sellers. That's all you really have to know. And that's the best thing to look at, because you're not clouded by, the other stuff. The worst thing you can have is an opinion. And like one of my favorite quotes from Paul Tudor Jones is that opinions are like armpits. Everybody has one, and it usually smells. So just remember, opinions can really hurt you. But sometimes when your opinions are right, you make a lot of money. But if your opinion's wrong, you better stand aside and pay attention to what it's trying to tell you. So my position in the stock market here is I'm just waiting to see what happens here in the first 2 days of the year. I'm locked and loaded, ready to sell, but I have to respect these days that have such a positive bias at the end of the month and the first few days of the month. We have to respect that. We also have a full moon coming in on the 5th, so we're looking at next Wednesday or Thursday as a possible, that comes in over the weekend, as a matter of fact, the 5th, so it'll be sometime during the week. Let me see, the 31st or the 1st, it would be Monday, would be my guess. What we'd be looking at, that would be the 5th. And so we'll be watching Monday the 5th as a potential for a turn down in the market. But that's what I'm watching. It could happen beforehand, but frankly, it would be a little difficult to do that. If you remember last year, as I recall, we broke really badly the first part of January. and went sharp down into February, and we hit that February 4th low. That was a huge Fibonacci number, and the market turned and just never looked back. It just exploded out of there and just kept going and going and going. And I remember that day very, very vividly because I was fortunate enough to get out of some short positions, and I had some longs on. And believe it or not, after the first day up, I took them off, which had a nice profit. But all I had to do was hold on. It would have made the whole year, relatively easily. It was a good year, but that would have made a fantastic year. But this year it's going to be very interesting because of the Bradley dates. We have so many of them that we're going to get some really good swings, which is, it's not going to be just one way with maybe a sharp correction here and there. I think we're going to get really choppy for 2015 just by looking at the Bradley model. We'll see how it starts to unfold, but it does, invert here and there. But the dates themselves are really good, so you have to pay attention to them. We've talked a little bit about Martin Armstrong's work here from Martin Armstrong Economics. He does a fabulous job with key dates, and he uses a lot of esoteric stuff. No one knows exactly what he's using, but if you ever read any of Martin Armstrong's work, you know that fellow is very, very well schooled in not only technical analysis, but he's well schooled in just about anything that has related to the market, and that includes, unusual approaches like, astrophysics and stuff like that. And just to have some really important things. And he has a big date, I believe, coming up into March of 2015. So we'll wait and see, what the market's doing at that time. But I think the key is to watch January 5th because that's the Monday coming in when everybody's back from vacations. There's no question about it. That'll be the time where they either get their checkbooks out or they get their safety deposit boxes open, and we'll find out, what direction that first few days is going to mean. There's a market adage that Basil has talked about, and I have also, is that the first few days of January determine how the year goes. Well, that's not necessarily, true, because last year the first few days of January were a total bonkers, and then down, went straight down into February, so it didn't work. And then from February through December, it's just been a one-way Corrigan. So you can't really do that. It's a method of probabilities is what we're looking at. There's no 100% out there for anything. No one can do that. I mean, anybody that tries they can tell you they got 100%, don't walk away from that person, run away from that person, because that just doesn't happen. And it will not happen because when you think you have something 100%, that man known as the Grim Reaper is right behind you with his sickle, and that's when you got to be the most have the most fear, is when you think you're infallible. That's the real key. There's been only one signal that I've ever known in all these years, and I've been trading for 6 decades. I found this one in 1968 or 69 with my friend Larry Williams told me about it. It's known as the telephone indicator, and that is when you're calculating, what you're making on a trade and how much you're ahead, pick up the telephone first. Well, we don't pick up telephones anymore, but you pick up the telephone and exit the positions because your greed indicator just hit the maximum level, and that's when you're in the most dangerous part. So whenever you're tempted to do that, you're having your calculator, how much money you're making, pick up the telephone, before you finish the calculation and exit the positions because your greed indicator has just hit pretty much the same thing. Back in the old days, that's what we had was rotary dials. I remember my first touch-tone phone. My phone number in Westlake Village, believe it or not, folks, was 889-1618. And that was before I knew what 1.618 was. That was back in 1968. And so it was a very, very important number. I've always remembered it. And later on, of course, I remember the importance of it. But the fact that it was a random number given to me, but it was really quite amazing. So anyway, neither here nor there. That just happens to be an old thing from the past that I happen to remember. Another question someone has asked me is about the gold market. Folks, as of Friday's close, I really thought gold had a real serious chance of breaking out to the upside, but we've rolled over today. We've given 78% of our return back that we made yesterday. We had a $30 rally. We've given, $26 back of that today. So if it doesn't hold 1172 level, gold is heading south. Silver needs to hold the $15.20 per ounce level, and then it has a chance to make it. But whether that has it or not, I don't know. We're having some really bad trouble in these commodities with, the deflation, but the rest of the world is, still in good shape from what it looks like. Unless you look at the emerging markets stocks, they still look very, very bad. The Chinese market still looks bad. But, the rest of it is just being held up by the United States, in my opinion. But we're going to know this in the next few 7 or 8 trading days. I think you're going to see a surprise. And when I heard Basil talk about a surprise to the downside, I literally I took out my dentures, cleaned them, and put them back in. It shook me up so much. So anyway, that's what's going to be looking at. So the low in the oil, we're making new lows on the day, of course, and the number that we're watching is around $51 to $52 a barrel, and that will be the case. I don't know if that's going to hold the drop or not. I don't think it is, and that's the main reason for that is the fact that we got the breakdown in gasoline. Gasoline here on the East Coast is $2.19 a gallon, and I mean that's unbelievable. I mean, last time I was in California, I was paying $5.40 a gallon. So this has been a real debacle for the oil market unless you've been on the short side, and that's the thing to keep an eye on. But we are heading lower. We're getting close to that 786 level. That's one of the things that I've been watching. In fact, I'll put that chart up because I featured it this week when I was doing my work on the charts, and I'll do the short-term ones because this has been a really amazing chart, folks, because over the last 5.5 months, this thing has had 7 $4 a barrel rallies. We just had one last week, but we had 7 $4 a barrel rallies just since September. And we had another one back in July, but since September we had 7 of those. It rallies $4 a barrel and makes new lows and makes new lows. But that just means that we're heading down to that 786 level, and that's a big number, folks. You're talking about the 786 from $33 a barrel up to 128, and then back to 52, 51. That's a huge correct. You know what I mean? That's the main thing that we're watching. So oil is still heading lower, and believe me, I think it'll give you plenty of time to get in if you get a chance, if it does turn. I know some of the oil stocks have already turned, like Chevron and Mobil and some of those, but that could be related just to the stocks rallying so much. There's sympathetic buying, along the way each time that happens. So we'll just have to wait and see. But you got the end of the year coming here. Well, that's a big revelation, isn't it? With 2 more days to go. And I don't think crude oil is going to do anything until it makes that, I'm shooting, say, at least $51 a barrel. And if you add another 5% to that, in other words, take another 5%, around somewhere between $51 and $48 a barrel is where crude oil should find some support. That would be getting heating oil down to just about the 786 retracement. Natural gas has just totally collapsed once we went through that double bottom at 360, and it's had a great deal of pressure along the way. So these are the things that you've got to keep in mind. So we got a little break here before we come up to the final segment. We got stocks selling off a little bit and gold dropping, and so is the crude oil.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN.
Okay, folks, I posted the chart for the XAU into the Tiger Den to let you folks look at what's happening. We have a double bottom possibly forming. We've looked at this in gold, also in silver. You know, whether this is going to hold or not is going to be very, very important, but we'll see. We've tried to hold at this XAU. It really needs to hold above, $60 a share in that gold-silver index. Otherwise, we'll be looking at, even lower prices, because these they could go lower. I don't believe they're going to go lower, but if the prices say they're going to break, then they are going to break. I've had several questions asked about this crude oil. Folks, I don't know if the bottom's going to come in exactly at 51 or 52 or 48. I don't know that. What I do is I'll wait and I'll be watching 15-minute charts to try to pick up on a butterfly or a 3 drive to a bottom pattern that will allow me to reduce my risk. But when the market's, dropping like a falling safe or a falling knife, you don't want to try to catch it. Wait till the knife sticks in the ground, like the old mumbly peg game, and then pick the knife up, because that's when the safe trade, really happens, and that's not anywhere close to that right now. Take a vacation, go out and, do something different. I have to tell you guys a great story. The day after Christmas, we all go shopping as a family just to pick up some values and do a few other things. And I had about an hour and a half to myself. And back in the days when I lived in California, there was an ad that came out every year. It still comes out. And the question is, what do you open the day after Christmas? And the answer to that is Santa Anita Racetrack. And it always opens the day after Christmas. So I wanted to play a few horses at Santa Anita Racetrack. And what I do is I watch the betting, and if a horse is 10-1 in the morning line and he gets bet down to 6-1, I know that there's live money on the horse, and so that's how I pick what my bet is. Well, I was in Philadelphia at Parks Racetrack, and they have a wonderful betting structure there, except for this year, the people that own Santa Anita Racetrack and Gulfstream would not allow simultaneous betting, so I couldn't bet. So I'm sitting there, and I'm sitting at a little table with this old guy. He was even older than me. He was in his 80s, and he told me that he had this exacta that he liked. He had to pick horses, 1, 2, 3. So for $12, you pick 3 horses, and so I said, okay, I'll take it. It was horses 7. Ran like Secretariat. He was 25-1, and he went wire to wire and won by 7 lengths at 25-1, and I got back about $700. And so I was very, very happy. We went out and did some good things, but I was almost, and I looked at him and I said, "Are you some kind of a guardian angel?" He said, "No." He said, "These are the first 2 winners I've had in 4 months." So that's how lucky you get. Who knows? Anyway, we'll wait and see what's going to happen to these markets. Come in on the Monday the 5th is the new moon. The full moon. It's also a Bradley date, and we'll be able to watch that, very, very closely. Remember, this is going to be a light week for as far as volume of trading, so some crazy things can happen. There are a lot of people that are not at work, and believe me, a lot of my friends, i.e. Rich Anderson and Byron and a whole bunch of other folks, are not even working these past 2 weeks, and I've done very little myself. So the markets are very, very thin, so you've got to be even more careful than you ordinarily are. So especially up in these areas where everybody's telling us how wonderful things are. And we'll see. Also, the other thing is say some prayers for the folks that were on that plane. I don't know if they ever found it or not, but that's a real sad thing to happen at any time, especially at Christmas time. Live every day in an attitude of gratitude, and may God bless.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.